Hey everybody, this is Brant from Wolf on Wall Street Trade. We have storm clouds on the horizon. I'm going to light up some conditions here that I have set. So these yellow ones started Friday the 12th, or the ABI signals. These are rare, so if you don't know about them, basically all it takes is one. It doesn't take a cluster like we have here of 6. It takes one, and generally speaking, we see a move in VIX, a move in volatility of about, on average, 50% over the next 1 to 30 days. It can be a little bit longer than 30 days, but that's a pretty good average. The hit rate on this indicator is probably about 90%, really high probability, but it is not a scalpel. So it's telling us, hey, there's storm clouds over there. The signal has been getting worse. This is a breadth indicator, by the way. So we are using it for volatility. These orange signals are where it has gone below, 2 steps below the trigger level, and this red one is 4 steps below the trigger level. So you can see we got the first trigger, and then it's just been getting worse and worse. When's the last time we saw this? Right before the crash earlier this year. So I've rolled the chart back to February 13th of 2025. First signal, second signal, third, fourth. Notice they get worse. In this case, we got 4, and then we got a 20% crash. We had a downside measured move on this crash from the point it put in a bear flag, 4,900. So coming from 6,200, our measured move, our target to get out of shorts was 4,900. There's the bear flag. Here comes the second leg down. Boom, 4,900. The low of the day was 48.35. The close was 50.62. Hit our 4,900 level on the nose, and we're talking about coming down from 6,200. Pretty happy with that. We also forecast where everybody was shorting the market at this point, especially hedge funds. We forecast a move up to at least 6,000 to 6,100. And on April 21st, when the S&P was down 2%, everybody's super bearish. 3C lit up like a Christmas tree, showed us insane amount of buying into that weakness. What we actually found out was that was inside information that China and the US, they said they hadn't been talking at all regarding the tariffs. And then this is the inside information of them actually talking. And then a couple of weeks later, it actually came out as news and the market took off. But 3C showed it to us right over here. We already had a target of 900 to 1,000 points higher when we were at this point. Signal is not very common. The last time we got it, we got one small one. We got a pretty decent move in VIX, but it wasn't huge. It wasn't at 50%. Remember I said it's about a 90% hit rate. But back here in the tech wreck of July into early August of 2024, so I've rolled back no signals at all until we get right up into that area. I'm going to zoom in a little bit. So here we are, June 18th. We already had suspicions just because of the way price and volume were acting. But signal, I think we got 8 in 9 days, right? Notice the market is making all-time new highs. And semiconductors were leading, right? Semiconductors were really important in this rally. More signals. Then we got a key reversal day right there. If we look at the NASDAQ 100, a lot of you subscribers may remember this. The next thing we got was that falling 3 methods candlestick pattern. So first leg down, falling 3 methods, bearish, boom, next leg down. This ended up being about a 15% crash for the NASDAQ 100, but the point again is into new highs. This thing is telling us storm clouds on the horizon, and we get this really ugly crash. And actually semiconductors, the SOX index, were actually forming a head and shoulders top. This was the very top of the head and lost over 40% from here, going down into the crash of earlier this year. Going back to the S&P 500, notice we didn't get another signal. I think it was a couple years between signals. The last signal that we got was as a head and shoulders top was building in 2021, going in to 2022's bear market. So let me back this up just a little bit more. So we got ABI signals at the left shoulder, at the head, and over here coming down to the right shoulder. And this is where the market actually broke down into a bear market that went all the way into October of 2022 down here. So if we back up again, those storm clouds signaling trouble as this head and shoulders top is building. Before that, here is a set of signals. Notice they get worse too, and this is January of 2020. You can probably guess what's coming. This is where inside trading took place. Congress got briefed on COVID coming to the US when everybody was saying it wasn't, and this was congressional staffers and Congress members trading on that inside information. Market didn't care. Kept on going, making modest, like 1/3% new highs. Everybody thinks they're super smart until boom, crash. And that's the COVID crash. And there are the signals. So not every single one of these is going to be a crash. Matter of fact, it's pretty rare. I'm just saying they show up as dark clouds. Here's a cluster of them with a pretty modest correction, and that's November 2019. VIX is probably averaging, I don't know, let's say 13 or so, and pops up to about 18. So this would be more the average kind of typical thing, that we get some kind of correction and we see VIX move about 50% or so over 1 to 30 days, but also shows up at some really nasty areas. So from the area I just showed you, you can see a little signal here, pretty decent sized correction over here. That's a 20% crash in the S&P. Take a little closer look at that one. At the time, we had reason to suspect something bad was coming before these ABI signals even came up. Had to do with rates, but there you can see a cluster of them, and shortly after, this is the crash. So we got one leg down, and we got a pretty decent consolidation, and then we got a second leg down. Let me zoom out a little bit. So again, storm clouds, 20% crash. Just so you can see the frequency, they pop up not very often, but here's a mini crash in 2015, 2016, pretty decent sized correction. You can see they typically lead to something. But coming back to present, we also have something else going on. So this is a breadth indicator that I use at signal levels to forecast a increase in volatility. An increase of volatility typically isn't good for the stock market. We have another signal that is specifically related to volatility. It is the correlation between the S&P and VIX. And I'm going to highlight that with positive signals right here. So in addition to those, we have, what is it, 3 days of positive correlation, 10-day correlation between the S&P and VIX. Here is what it looks like on the correlation chart. So there you can see it, and VIX typically has a negative correlation with the S&P. So this is the 10-day correlation between the S&P and VIX, and generally it's running down here near -1, right? This is crossing into positive correlation at 0.44. The highest is 1. That would be complete positive correlation. You never ever see that. This generally runs, I would say VIX and S&P generally have about a 70-75% negative correlation. I'll show you what that looks like on a price chart. But the point is, when these signals show up, they also are storm clouds. So we can see some over here. This is the tech wreck that I just showed you with the NASDAQ coming down about 15%. And again, you can see I don't go with any breach or any positive correlation. I go with strong ones. So I only highlight these strong signals. Back a little bit further, we have that 500-point decline. There was a little mini head and shoulders here. The S&P had a 500-point decline over 3 months. So it signaled it right there at the top of the head and shoulders pattern. If we go back a little bit more here, you can see it again right here at that head and shoulders top and what became a bear market. Zoom back to that area. So that was the Head and Shoulders top there. There's the signal, and then this became the bear market. Zooming out a little bit more, you can see it catching some pretty nasty events. Warning ahead of the COVID crash, a pretty nasty pullback over here, another over here, and right here ahead of and into 2018's Volmageddon event. So I think there's probably a 12% or so crash for the S&P 500, but volatility exploded. I think 450% or something like that. So a lot of hedge funds were short VIX. They went out of business overnight. The XIV ETF had a termination event because it lost so much. It became no more. So Volmageddon right there, got the signals ahead of time. Storm clouds, that's what I'm talking about. On a price chart, it looks like this. So this is the S&P and VIX in blue. I don't have them normalized, otherwise you wouldn't really be able to make out anything. But it looks like a Rorschach painting or a Rorschach picture flipped on its side, like mirror inverse. They move opposite of each other for the most part. But if we look at what's been happening more recently, what you could see is VIX doing its thing as it should. S&P comes down, VIX soars. S&P goes up, VIX comes down until we get over to this area. Look what VIX is doing with the S&P. That is positive correlation. Now, how much more this builds is important. The grim reaper of positive correlation signals is the 30-day, but not just going positive. I always use levels above the noise. And what I'm going to do is just change this correlation from 10-day to 30-day. And then, sorry about that noise. And then we're going to take a look. Okay, and I'm just going to show you that these are rare. So we're going back years here, right? See any pink arrows? There's one at the top of the 2021 bull market into the bear market. If we go back further from there, there's the COVID crash. Didn't pick up on that. Volmageddon. Clustering all over that at all-time new highs. Everybody's super bullish, super frothy market. Nobody could imagine the market ever going down. There it is. This is when VIX exploded. And then I think we have one noisy signal there. Did get a correction. But I don't think we had another until the top of the 2007. Yep. Top of the 2007 market going into the great financial crisis. So this signaled in May, market topped out in October, financial crisis here. So when you see these are like just ominous grim reapers saying like something ugly is coming for the market. And we can even go back and see it at the dot-com bubble. But I do have to change this to a 2-day chart, so I cut it down to 15 over here. So that's a 30-day correlation. And there were a lot more signals, a lot more noise before 2003, because 2003 they changed VIX from the S&P 100 to the S&P 500. But over here you can see this is the top of the dot-com bubble, and then the bear market that lasted a couple of years coming after that. Like I said, they're not scalpels, they're just grim reapers. In fact, you want to see something crazy? Hold on. Okay, so here's the Dow. Remember, this is a 2-day chart right now, but this is the Dow 1987, chugging along. Boom. Can anybody guess what's coming next? Black Monday. So that's the 1987 crash. Here's the Grim Reapers showing up again right before it. Now I'm not showing you this because we have that signal. It's just we do have a trend of positive correlation in the S&P. I don't know how far out it goes. I know it's already showing up on a 20-day chart, I believe. Okay, so I've switched it to the 30-day correlation on a 1-day chart. You can see most of the time VIX is deeply negative with the S&P, deeply negative correlation, down here towards -1. But if we zoom in and take a really close look, look at what has been happening recently. It is at -0.10. It's almost turned positive. Now, that wouldn't be one of these Grim Reapers alone. It has to hit a certain trigger level that I set based on back testing. I'm just saying it could move that way. But the way things stand right now with the 10-day, which I would consider more of a market correction signal, and with these ABI signals on top of it, and you can see what happened last time that we got those ABI signals, it's storm clouds on the horizon. So for members, hopefully that explains what I'm looking at and how I look at it. And if you have questions, feel free to email me and I'll try to answer them. These are not infallible indicators, but they're very high probability. You'll notice in almost every instance when you see them, the market's at an all-time new high, generally rallying, generally there's a lot of optimism, and then these invisible storm clouds show up and you get crashes, or you get at least decent corrections. So be aware of that. Don't be captive to recency bias. Don't be complacent. I think this is a good time to look at your risk management, hedging if you need to, trailing stops, whatever you need to do. As far as what we're doing, we're looking for trading opportunities. And there's a couple indexes that we're watching, specifically NASDAQ and small caps. And there's other things we're watching too, in rates and credit and stuff like that. But we're looking for the actual trigger event, the actionable event, and the best place to play it. In the meantime, we've got some commodity plays that have been going insane. Gold, we've been doing fantastic with. Silver also has been doing pretty well. But some of these commodity plays that we're in, not oil and stuff like that, but like rare earths, have been doing fantastic. Hopefully this video helps. If you like the video, give it a thumbs up, leave a comment, leave a question if you like. I'll try to answer it. Don't forget to subscribe to the channel. I'll try to be on here more often. I've been working like 16-hour days pretty much most of this year. So the weekends have been like a lot of catching up on sleep. But when I see something, I check in. So don't forget to subscribe. If you really want the nitty-gritty of the insights, consider subscribing to Wolf on Wall Street Trade. The link is in the video description. Members, I'll see you Monday. Thanks, everybody.